Hello, thank you for viewing this video overview. In this video, we will cover some of the features available within a multifamily property model in ARGUS Enterprise version 13 and beyond. In ARGUS Enterprise, portfolios and scenarios can be set up to improve your current workflow processes or mimic those already in place. In those, you have the flexibility to model multifamily property types and mixed-use assets, such as retail multifamily, alongside other commercial property types. These assets can all reside in one portfolio, giving you data integrity for your consolidated reporting. In AE version 13, we've enhanced the core cash flow modeling capabilities for multifamily assets. So let's dive in to view the details. If you are already familiar with ARGUS Enterprise, you will notice that the multifamily property type is very similar to a commercial property type, which makes the solution easy to learn. The split screen allows you to quickly analyze data and make modifications. We'll focus on the input screen, where you have basic assumptions listed on the Property tab, market assumptions such as inflation and market rent, among other items, and all property-level miscellaneous revenues and expenses are on their respective tabs. We'll revisit the Market Leasing tab shortly, but for now I'd like to bring your attention to the updated multifamily rent roll. The new multifamily rent roll supports many detailed data elements traditionally only found in commercial rent rolls in ARGUS Enterprise. The input screen is laid out in a grid-like format, so you are able to copy and paste data from Excel into AE to quickly create or update models. The first column you'll now see is the active versus inactive toggle, which allows you to indicate whether a line entry is active and included in calculations and reports, or inactive and excluded from calculations and reports. This function is especially useful if you are looking to see how your returns are impacted by losing one or more tenants without having to delete line items from the rent roll or create multiple files to reflect different leasing situations. With the addition of record IDs and the lease execution and start date fields, you can model and forecast your residential rent roll with precision, and you now have a choice in how you model your multifamily rent roll. ARGUS Enterprise has always allowed users to model the rent roll by unit mix, which means grouping the units by floor plan and forecasting average rents and expenses by unit type. These new entry points allow you to model individual lease contracts with specified lease start dates. You'll continue to see inputs for area per unit and total units, initial and max occupancy, current rent and free rent. And just a note here, you can now apply CPI increases to a multifamily current rent, so you can reflect indexed rent for longer-term unit leases. You can also capture tenants' concessions, vacancy allowance, credit loss, and security deposits. Many of these fields can be detailed through the use of the ellipsis button if these values need to vary over time. Through the new detailed miscellaneous rent and incentives areas, you have the added flexibility to forecast unit revenues and expenses, including move-out fees, relocation incentives, parking, and service charges. Because this is a forecast and your assets may be held for longer than a year, there may be unit rollover assumptions that need to be modeled to account for changes in existing tenancies. Within ARGUS Enterprise, there are 3 ways you can capture unit rollover. You can assume an even unit rollover with an average term in number of months, such as 12 months. You are able to detail the rollover and specify the number of units to roll over each month. And this option allows you to account for seasonality if you need to model something like a student housing property where there might be heavy turnover during the summer months. The newest option is Cpi Threshold Percentage. Let's say you choose not to increase rent every year because you find tenants frequently tend to move out when rent is increasing. Over longer periods, however, you may want to see residential rent rise in proportion to an index. So with the help of this unit rollover option, you can forecast a unit rollover and a raise in rent that's only triggered when the relevant index reaches the specified threshold, like 5% or 10%. Once the unit rollover assumptions have been made, you will want to model your market assumptions to be used upon rollover. These assumptions can be accounted for through a multifamily market leasing profile. Here we can account for new and renewing market rental rates. This screen also contains many of the same inputs we just discussed in the rent roll, like free rent, miscellaneous revenues, and incentives. After all of your market assumptions are entered, ARGUS Enterprise will use the renewal probability to calculate out a blended average between the new and renewal assumptions to get a more accurate future forecast. Market leases can be used to model periods of refurbishment to your property as well. As previously demonstrated, it is possible to model individual leases on a per-unit basis. Going back to that example property, you can see I have each unit listed in the rent roll. So with this functionality, I could apply assumptions for spaces that are being refurbished, where rental rates are reduced or zeroed, and I see a rise in improvement costs. I have each unit tagged with pre-rehab, rehab, or post-rehab assumption sets, and these sets link back to the market leasing profiles. For each unit, you can even tag what happens after the initial market assumptions expire. For example, if a unit picks up pre-rehab market assumptions for one term, then I will see the unit roll to rehabilitation assumptions where essentially it goes offline. Naturally, once the refurbishment completes, we would see a tenant return. In my example, the units rolling to rehab assumptions will pick up post-rehab assumptions afterward, so I can forecast a return to the market rate for those units. Whatever you decide to model in market leases, the new, renewing, and blended results can be viewed within the assumptions report. You'll notice that this report includes inflation assumptions, so you can easily determine what value is going to be picked up when the unit rolls over. Beyond the assumptions report, there is also a cash flow report. All reports at the asset level within ARGUS Enterprise have hyperlinks within them that will either take you to the input to see where that value was entered, or if it's a line item that is comprised of multiple elements, such as the potential market rent, by clicking on the hyperlink, AE will navigate you to the unit reports. On the unit audit report, you are able to see the breakdown of the potential market rent by unit, allowing you to better audit the values that are being calculated. All unit reports are useful as they give you more detailed insight into the line items that make up the overall model. Report options can be configured for each report, so if you wish to view the data on a monthly basis instead of an annual basis, or if you've imported in actual and budget data, you are able to display those results on your reports. All reports can be exported to Excel, PDF, or you can create a report package to view multiple reports in one Excel workbook, for example. All the functionality I've discussed with you is available for both multifamily and mixed use with multifamily properties. And you can run consolidated reports across multiple assets, whether they be multifamily assets or other property types. Let's take a look at running a consolidated cash flow report. In this report, you'll notice there is a section for my commercial rental revenue at the top of the report, and then my multifamily rental revenue follows. With the report options configured, the bottom of the report will display your unleveraged and leveraged IRRs for the portfolio. Thank you for viewing this short demonstration. To learn more details about ARGUS Enterprise, please contact your regional account manager.